Mark Carney once said, we, the Fed, all the major global central banks and supervisors would have direct regulatory oversight. Keep this in mind as we discuss today the financial cycles and its link to geopolitics and what you need to know. My name is Dr. David Oualaalou.
And my name is Dr. Ross Stewart.
And you are watching Geopolitics in Conflict.
First of all, we'd like to thank you for all the comments you've been sending us. They are so informative, so thought-provoking, and so many of them. Again, thank you.
Well, indeed, Ross. I mean, for all those impressive comments and so forth. We thank you for that. We also want to thank our Patreon members, the new ones who just joined our membership. And if you like our videos and you want to support us, consider joining the membership. So thank you for that.
You know, one of the comments we keep getting is, would you like to have some guests? We would like to see you have guests. So what do you think we ought to do with that, David?
We're going to have one of the top in the world in this field. So we do have a guest today for you based on the request. And his name is Mark Moss. And if you have not heard of Mark Moss, then you are missing a lot. So we're going to now interview Mark Moss. Was kind enough to join us here. And you're gonna be in for a wonderful, wonderful show. So, welcome, Mark.
Yeah, thank you so much. I'm happy to be here. Geopolitics, finance, where those converge, those are my topics that I like to talk about. So, always happy to get a chance to do that.
Great. So, we are in great company. So, well, first of all, just for our viewers, why don't you just give us a brief bio about yourself, your background?
Yeah, sure. So I've been a full-time investor / business entrepreneur person for 25 years. The lines between business owner and investor get kind of blurred. I got hit really hard in the 2008 financial crash. Made me realize that I was actually really good at making money, but I didn't really understand this whole financial casino that's going on behind the scenes. And so I had to kind of figure out exactly what that was. And so for the last dozen years, I've just spent researching behind the scenes, what's really going on. About 2015, 2016, I started creating content, sharing some of the findings that I've been having. And I've been doing so ever since. And so I'm still a full-time investor. I have a small investment group that I work with. And I try to bring as much education and training and insight to people as I can. So on my YouTube channel, my podcast, et cetera. And I'm really focused on kind of where these three things are converging. So we have this kind of financial world that's driven by this kind of political world and this technological world at the same time. And so that's kind of where I spend my focus. Central bank fiat money bad, sound money good.
That's great. So, well, we are once again, very delightful that you were able to join us. So without wasting any more time, let's delve into it. So here's our first question is, what do you think the link, Mark, between the financial cycles and geopolitics?
Yeah, so, I talk mostly about finance topics. And in order to do that, sometimes I talk about the politics. And I'll often get comments. I get 5,000 comments a week, but I'll get comments that say, Mark, we want the finance information from you. Stay out of politics. The problem is that if you don't understand the politics, you can't understand the finance. Right. So, if you're just a day trader and you're just looking at charts, of course, you don't care about the politics. You're just caring which way the next candle goes. But for someone who's looking at a macroeconomic view, we're really trying to kind of guess where the future is. I mean, they say the market is a discounting mechanism. So every time you're trying to buy an asset, you're trying to guess whether the price will be higher or lower in the future. That's why it's that discounting mechanism. And so in order to know where that future is going to be, as Wayne Gretzky says, skating to where the puck is going to be, then we have to understand the policies that are being put in place today, because that's what's driving it. And so I think it's important to understand that, like I said, you really can't understand one without the other, at least, like I said, if you're looking over that long enough time frame.
And that is exactly what, as one who've been sort of involved in international affairs and global affairs. I used to work in Washington, D.C., so we can always had to follow up exactly what's going on around the world. So geopolitics, to me, makes perfect sense in understanding those changes coming up through. And your video the one I watched, by the way, about the financial cycles, makes perfect sense in understanding the link between geopolitics and overall economics. And this is where we wanted our viewers to really grasp an understanding of what those financial cycles are all about and why do they need to have an understanding so they can prepare for the future.
Yeah. Well, I think where it really gets interesting is that we can see that you keep kind of going back and referencing cycles. And so there's cycles in all areas of life. And so we have summer, spring, winter, fall, right? The year has cycles, right? We repeat these weather patterns, for example. What's interesting though, is that a lot of people think that life kind of works linear. So meaning we're just kind of moving down this track, one step in front of the other, and we kind of just have this slow growth progress, et cetera. But really what's interesting is that life isn't actually linear like that. It's actually exponential. So it explodes and it grows faster than we've ever thought. But while it's moving exponentially, progressing exponentially, in that exponential growth, we have cycles that continue to repeat. And so that's the interesting part. And like I said, we can see them in all areas, whether that's from the weather, that's how we interact politically, socially, culturally. I call that PSE, or technology moves in cycles. And then of course that drives financial markets. And so I think the thing that most people probably need to kind of get their head around to really kind of understand this and drive this point home is that to really understand these types of things or complex subjects, you have to understand that there's complex systems. And so the body, for example, is a very complex system. And what's happened is the medical system has been taken over by pharmaceutical companies. And what they want to do is they want to prescribe you a pharmaceutical to treat a symptom. Right? So for example, you have heartburn. So you should take this pill for heartburn. But the problem is that kicks off all types of other problems in this complex system. So the problem might not be that I have a pill deficiency. The problem might be that I need to bring the, right? I need to bring the alkaline level up in my body, things like that, right? Maybe I'm getting headaches, but maybe it's because my gut flora isn't right. And so the body is a very complex system and it needs to be treated holistically. The market is no different, right? And so we have today this, all of our economists think that this economy, the market, is like a machine that could be built and it could be ran, it could be managed, but it's not. The market is made up of living, breathing people who are irrational and change their wants, needs, and desires on a regular basis. The market is a complex organism. And so when these policymakers go in and try to change one piece of the market, it creates all these unintended consequences in other places. And so that's the first thing. I think you have to look at things more holistically. And then in order to understand some of these things, you have to study other disciplines. So for example, to understand the financial cycles, which we have, there's 28-year kind of financial cycles. There's like a big 84-year like credit cycle. But to understand what drives that, we really want to go look at the technology. And there's 50-year technology cycles. So what's happening in those? Because new technological revolutions kick off new economies. But then what drives the technological revolutions? Well, that backs up to political, social, cultural things. So you have to understand that solutions come to problems, right? Solutions come for problems. Now today with runaway federal, central bank printing, we have a bunch of money looking to go solve problems that don't need to be solved. They have solutions without problems, but typically solutions come to problems. And so these things are reactionary. So we have this problem in the social cultural world, and technology comes up with a solution for that. And then that new technology, that technological revolution, kicks off a new economy. And so those three have to be looked at together. So you need to look at the market, the economy holistically, but then the other three. So an example, just real quick, is that right now we're in this financial cycle revolution. Like we're at this stage where the financial system is ready to be reset. We know this because of the cycles, and we're at this 84-year gap right now. And so a lot of people are wondering what's next. Is the dollar going to lose the reserve status? Will China take over the reserve status? Will we get, the IMF SDR? Will that be the new reserve status? And you might ask those questions, but if you haven't taken the time to go back and look at the other complex systems that drive that, you can't really get to the right answer, at least in my opinion.
Yeah. Well, just to piggyback on that one, Mark, because that's some areas that I've been very, very interested in, and I did some major writings on that stuff. For the printing, the amount of printing that the federal government is moving on, with the increase of the debt, the national debt that is. And I do remember one of your videos I watched, because I follow your stuff closely. One of the things you talked about and it really caught my attention, it has to do with the debt to GDP ratio.
Yeah.
You mentioned about the Portugal, Japan, UK, US, India, and interesting enough that when I checked for China, China has only about 68%. Now, my question to you for this, Mark, is especially for our American audience here, with the United States reaching that 100 mark where you said point of no return, is the printing of money contributing to that problem?
Yeah. Well, again, all right. So these are complex subjects or systems, I should say. But to your point, yes. First of all, on your China comment, we can't really trust any of the data that comes out of China. We also have to look at, like, are we looking at like national debt? Are we looking at government debt? Are we looking at total debt? And so there's a bunch of different numbers, and you want to make sure you're looking at the right ones. But back to the question that you asked, is the money printing leading up to that? And the answer of course it is, right? I mean, money printing is taking on more debt. And so that increases the debt. Now, the reason why they do that is per Keynesian economics. They believe that when we have a slowdown where GDP were to drop, for example, we go into a recession, that the government should try to do stimulus spending in order to stimulate the economy to start growing. And then eventually the growth that's stimulated would grow us out of that deficit. So that's like what the Keynesian economists believe. And that's kind of the system that we're on. And so that's what's been done for 100 years. And, it kind of worked a little bit. And the reason why is because you mentioned this number when the debt to GDP gets over 100. And really the key number is 90. And so per what's known as the Keynesian multiplier, what happens is, let's say that we lost $1 trillion in the economy. So the government might want to spend 500 billion, half of that, 500 billion in stimulus, and then maybe get $1 trillion or $2 trillion worth of growth out of that. But what happens is it's like diminishing returns. So the more our debt to GDP grows, that ratio grows, the closer we get to that 90% level, the less growth we get for every dollar of debt we take on. And once we passed that 90% level, we're not getting enough growth to offset that debt. And so now we're at about 130%. And so that means that we're not getting enough growth for the amount of debt that we're taking on. And so once we get over that number, it's kind of game over, which is where most of the developed world is at today, past that number. Japan's up to like 230%. And so back to your original question, does money printing help make that worse? And the answer is yes. So as they print, the debt grows. And because our debt to GDP is so high, we're not getting the growth we need out of it.
Wow. Yeah.
What do you think is going to happen to countries like Japan?
Well, the problem with Japan, so, each country is a little bit different story. Obviously, Japan doesn't have the world reserve status like the US dollar has, but they export a lot of services. And so they've been able to kind of maintain. However, they've had no growth. They've basically been in what's called like stagflation. There's been no growth for a few decades now. And so while some people might point to Japan and look at that as a success, they've managed to print all this money. They've managed to run their debt to GDPs up to 250%. And look at them, they're still okay. I would argue that they're not okay. I would argue that it's not a good economy. It's not an economy that you and I would want to live in. And so what ultimately happens to Japan and everybody else? Well, eventually, what I like to call it, natural law takes over. And so what's natural law? So gravity.
Yeah.
Gravity is a law of the universe, the law of gravity. Now, with enough money and enough technology, we could defy gravity. We could suspend it temporarily, but we're always going to have to be beholden to it.
Right.
And so there's other natural laws like the law of sowing and reaping, the law of producing before you consume. You can't consume if you haven't produced yet. Now we've been able to suspend that or defy that because we built up so much capital 50 years ago that we're able to run these massive deficits. We're suspending gravity temporarily. We have our parachute out. Problem is that parachute's got a big hole. Gravity's going to pull us down. And so that's kind of where we're at right now. This doesn't work. We can see how fast this has fallen apart in just 50 years. We've gone from having a sound money system. 1971 came off the gold standard. And today we've racked up over $300 trillion in debt. We have booms and busts happening everywhere. Countries around the world are seeing massive inflation. And that's just in 50 years.
Wow. Wow. That means now for an average American consumer, where his worries or her worries going to be now, whether his or her money will still have any purchasing power. In other words, will the dollar just become, I won't use the term useless, but weak enough that it won't matter if you have a stack of money, you can't buy anything with it. It's useless.
Yeah. Well, you said a key.
Hit it, Mark?
You said a key word there, and the key word was purchasing power.
Right.
And so that's a really key piece that people need to just get their mind around. It's very simple, but yet people don't really think in those terms. And so, for example, Brent Johnson, a good friend, he talks about this dollar milkshake theory. And he talks about how the dollar is going to soak up like a milkshake, like a straw, soak up all the liquidity of all the other fiat currencies in the world. And so basically he's saying that the dollar will get stronger compared to all the other currencies. Okay, that's fine. That's great. So to your question, what will happen to those currencies? Well, it depends on what country you're in. If you're in Lebanon or Argentina or Chile right now, your currency is blowing up, but dollar still seems to be hanging on. The dollar is getting stronger compared to other currencies. But at the same time as the dollar is getting stronger to other currencies, it's getting weaker to oil, to gold, to Bitcoin, to real estate, et cetera. Right? So even though the dollar's getting stronger to those currencies, it's getting weaker to real assets, if that makes sense.
It does.
Wow.
And so the thing that you have to switch your mind around is to think in things in terms of purchasing power. And so what do I mean by that? Well, I don't know the exact numbers off the top of my head. I'm going to just spit these out. But let's say that 1960, the median home price in the United States was $50,000. And at that time, it would have equaled X amount of ounces of gold, X amount of barrels of oil, X amount of bushels of wheat, right? Well, today, the median home price is $250,000, let's say. But it gets you the same amount of oil, same amount of gold, same amount of wheat. So what's happened is the purchasing power, because really wealth comes down to not money. Wealth is goods and services. So if you and I were stuck on a deserted island and I had $1 billion sitting in a suitcase, but there was no food, no water, no phone to get off the island or a boat, what good is that $1 billion? It's worth nothing, right? I need to have goods and services. That's wealth. And so we need to keep in mind what the purchasing power of goods and services are. And so that's why we need to start looking at things a little bit differently. And a really good analogy, or not analogy, but an actual story of this is one of the most famous examples of hyperinflation that's told all the time is Weimar Germany.
Right.
And, their currency blew up after World War II. And there was a book written about it, When Money Dies. And in the book, they talked about how the people thought they were getting rich. They couldn't believe how much their homes were worth. Look how much gold is worth. Look how much all our assets are worth. We're rich. Let's sell it now before the bubble bursts and we lose all the value again. And so they did. So they sold their gold, they sold their real estate, et cetera. And they basically traded back the currency. But then the currency was worth nothing.
They lost everything.
So they end up just holding these papers.
Well, they didn't just hold the paper. As a matter of fact, what happened is that the paper became worth so little, worthless, that they actually burned it in their fireplaces for wood because wood was worth more than the paper.
Oh my God.
Wow. Yeah. So So to take this concept of the purchasing power and the dollar in general term, and if we are to think about it in terms of a global setting, and this I approach it from my background, from a geopolitically speaking. With, for example, China's introducing the digital yuan. The European Central Bank has been talking about the digital euro. And now we noticed in El Salvador, they launched the Bitcoin, even though the IMF refused to assist El Salvador for creating the mechanism. However, the Central Bank of Latin America, I think, steps up to assist them with something like that. So where do you see where things going in the US financially in relation to what's taking globally, geopolitically speaking, with countries like China and Russia dumping the dollar, okay? With the Europeans considering the euro, the digital euro, are they thinking in terms of dropping the US dollar as global currency?
Well, I mean, we're definitely seeing a lot of de-dollarization around the world. So Russia, for sure, they've been at the forefront of trying to de-dollarize, and they've been very vocal about that. Obviously, China has been kind of leading that. And so China, Iran, Russia, et cetera, as trading partners, they've been trading oil outside of the US dollar. So after the dollar lost the reserve, didn't lose, after the dollar dropped the gold standard in 1971, they moved on to a petrodollar system where basically the oil was priced in dollars. But in the last several years, we've seen oil being sold, not just in dollars, but being priced in other assets. And so that's part of this de-dollarization. China's been expanding their grip across the world, building out this kind of Belt and Road initiative across Eurasia. And so they're really pushing this de-dollarization. And so that's definitely expanding. I think that's only continuing to grow. And in addition to that, the US is helping that happen in a sense where the US, being the reserve currency status of the world, they use the SWIFT system to move money around the world. And so basically the dollar has become a weapon now. And so if the US doesn't like what you do, then sanctions on you and sanctions on you and sanctions on you and sanctions on you. And basically they're kicking people out of the financial system. That's what sanctions are. The problem with that is that if you have a party at your house, eventually you kick so many people out of the party that you're the only person left.
There's no party anymore.
There's no party anymore.
So we have countries, and big countries, Russia, China, Iran, actively de-dollarizing. And at the same time, the US is pushing people out as fast as they possibly can at the same time. So it's definitely not a good recipe.
Wow. And where this has to do with the gold and silver, where do you see that market going, given the changes in the financial system that's taking place?
I think, gold and silver, first off, I would say I have kind of a little bit of a controversial take on that. And that is that gold has been money for 5,000 years. Central banks have been accumulating more gold the last couple of years than any time in history since 1971, when we severed the ties to the gold standard. However, silver, in my opinion, is not the same as gold. Silver is not money. For thousands of years, silver was money like gold. But the thing with silver was that, gold is big, it's heavy. So it was okay to use for big denominations. Silver was easier to get. It was lighter, it was smaller. So it was used in unison as a smaller denominations. The problem is that, of course, like all things, over time, new technologies are developed. And so we developed a new technology called paper gold certificates. And so the gold went into the bank gave us paper gold certificates. Those paper gold certificates were now used for small denominations. At that point, there was no need for silver anymore, and silver was demonetized in the late 1800s. And so silver stopped being money. I get it. For everybody listening, they're probably mad at me saying this. Silver's still worth something, and I believe that silver is still a good investment because I believe it's still going to go up, but not for the same reason that gold's going up. Central banks are buying gold; they're not buying silver. The countries that tried to hang on to silver as the gold standard was being brought into place, like China, for example, they tried to hang on to the silver. They lost massive amounts of wealth by doing that. And so, anyway, back to the question on gold. Obviously, like I said, we can see the central banks accumulating that. I believe that success leaves clues. If they're accumulating gold, then that's something that you might want to consider accumulating as well. The reason why is it's a hard asset, meaning it's something that can't be inflated. It can't be created, out of thin air. However, The problem with gold, and I still think it's a good trade. I think it's probably one of the better assets to own over the next decade. The problem with gold is because of its size and its weight. And again, I'm admitting it was money for 5,000 years. The problem is that candles were also used for light for thousands of years.
Yeah.
Today we have electricity. Horses and feet were used as transportation for all of humanity. And then we got cars. So technology changes things. And so while gold was money for 5,000 years, it's still considered money, and central banks are still accumulating. I still think it's a good place to go. I think there's a chance that as this currency system blows up, the central banks might try to use gold to get some trust back into the system. And if that happens, there could be a massive price increase in gold. The problem with gold is that we live in a digital age now. You and I are in different parts of the world, and yet here we are doing this. And if I wanted to send you money right now, how would I send you gold? I mean, I can't. So because of that, gold requires centralization. It requires me to deposit my gold in a bank with a central administrator, and then they would then credit my account to your account. And so because of that centralization, I like to say that centralization always leads to manipulation. And we know this to be true. So that's why was it Executive Order 6102, 1933, they made gold illegal in the United States. And it was easy for them to do that because all the gold was already in the bank. All they did was they shut the bank down for a week. They opened the bank back up and said, now you can't get your gold out. If they would have had to go to every single person's house across the plain with rifles, they probably wouldn't have been able to do that. But gold requires this centralization in order for it to work, especially in today's internet age like we are today. And so because of that, it's always going to be manipulated, meaning they're always going to print more debt than the gold that they have, which they've continued to do over and over, which is why they sever the gold tie. And so I just think that while it's still probably a good trade to be in for the decade, it's not the future in the long run.
Wow. What do you think the future is for the cryptocurrencies, most especially Bitcoin?
Yeah. So I talked about understanding those three different pieces, right? Where are we politically, socially, culturally? Where are we in technological ways? And where are we in financially? And so I would go back, and first we would start by saying, where are we politically, socially, culturally? So we can see that right now all over the world's breaking apart. I mean, it's easy to see tensions are running high. Everybody's at each other's throat, division everywhere. And not just is there, the leadership of the world is actively trying to break it apart as opposed to trying to bring people together. So it's not even a system that they're trying to fix. It's a system that they're seemingly trying to even blow up. And what's interesting is, again, we can go back through history and we can understand why this happened. So about every 84 years, we go through what I would call a regime change or a populist uprising cycle every 84 years. And so every 84 years, we see, like I said, these regime changes. And so if you go back, we're 2021, if you go backwards 84 years, you go backwards to about World War II, and that was obviously the whole world breaking apart. Hitler, Mussolini, we had FDR's New Deal, which basically took America's free system into a more of a socialist type system. So we had that regime change. If we go back another 84 years before that, we had Karl Marx wrote the Communist Manifesto, which led to the largest revolution across Europe. And basically, we can see that I can keep going. But then 3 84-year cycles equals a 252-year revolution cycle. Yeah. So 250 years ago from now was the American Revolution, the French Revolution, the Declaration of Independence, et cetera. 250 years before that was the Protestant Reformation. Martin Luther nailed the 95 Theses to the church door. And what the relevance, the important pieces of both of those are that both of those were the same thing. They were politically, socially, culturally, the government, the people, man, had gotten too oppressive. They had centralized too much power. And the people rejected that and moved from a centralized system to a decentralized system. So in the Protestant Reformation, the Roman Catholic Church and the king, they worked together. And the only way to get to God was through that central entity. You couldn't read the Bible. You couldn't ask questions. Well, 70 years before that, the printing press happened. The Bibles went everywhere. And people read that and said, we don't need this central entity anymore. Now we can decentralize and now we can go direct. Again, 250 years ago, American French Revolution, the American Revolution was rejecting the central authority of the monarchy. And they set up a decentralized government. The Republic of the United States was set up as a decentralized government. And so where we are today, I think it's pretty easy to see that we're pretty much at peak globalization, peak centralization. World Economic Forum, World Health Organization, World Trade Organization, the IMF, the UN, they've centralized all this power, and the world is rejecting that.
Right.
And so history tells us they're rejecting centralization to move to a decentralization period. So what's interesting about that is, again, history shows us that, and I think it's pretty evident to anybody that's looking at that. And where it gets really interesting is that while we're going through this period right now, we also have these technological revolution cycles that happen about every 50 years. And we're in one right now, and there's a brand new technological revolution that's happening. And what is it? It gives us decentralized technology, right? Problems create solutions, or solutions come to problems. So the problem is, so let's look at this. So the problems that we have today are too much centralization, too much, which leads to too much manipulation. So we have the central banks, the IMF and the central banks below that, creating unlimited amounts of money. That's the problem. All that unlimited money has created distortions in every market. And we talked about the debt. Now that's diminishing returns. So we have centralization, unlimited money creation. We have massive censorship problems, right? People are getting shut down everywhere. Voices are being shut down everywhere. So massive censorship problem. Another really big problem that we have is we went from a rule of law to being ruled by men. And so what do I mean by that? The Constitution was meant to be a rule of law. And the way that this has to work is that the law needs to be set in stone. It needs to be equally applied to everybody. And it needs to be easy enough to understand that we can all understand it, not all convoluted where you have to have attorneys to figure it out. And it has to be immutable, it has to be permanent. And the reason why it has to be permanent is I need a set of rules to set my life out on. So I can build my life on that set of rules, and you can determine your best path to work across those rules, right? The problem is that now we don't have a rule of law. We're ruled by men. And so what does that mean? Well, they're arbitrarily changing the rules all the time. For example, you can't eat inside your restaurant anymore. So I spend a bunch of money to set up outside, and that works. And then, oh, you can't eat outside anymore. Okay. Well, now you can eat inside, but you have to put all this plexiglass up, and it's going to be at 30%. So I do that. Now it can be 50%, right? Like, how can I plan my life on rules that are constantly changing and they're unevenly applied? Oh, you're a minority, or you're an ethnic, or you're this whatever group, you're treated differently, right? And like that just can never work. So we need immutable law, right? So again, centralization is a problem. Unlimited money supply is a problem. Censorship is a big problem. Sovereignty, lack of sovereignty is a problem. And ever-changing law. Those are problems that we have today. So then we need solutions for those things. So we need a system that's decentralized. We need immutable code, law that cannot be changed. We need a fixed supply, scarcity. We need something that we can hold that's censorship resistant, that cannot be taken or stolen away from us. And sovereignty, meaning not only can I hold my wealth, I can move my wealth with me in the world, but I can also send it to you in a way that can't be stopped, blocked, or prevented. So those are the solutions that we need for the problems that we have. And so the technological revolution we have gives us a technology that meets all those qualities. Now, in the world, there's, 8,000 or maybe now 10,000 cryptocurrencies. But out of those 8 or 10,000, there's one that meets all those criteria. There's one.
Bitcoin.
Bitcoin. Yeah, that's exactly right. So Bitcoin is the only one that gives us that censorship resistant that we need. Bitcoin is the only one that gives us the immutable code, the law that can't be changed. So most of the other cryptocurrencies, they have some form of decentralized governance. Governance being the word. We don't want governance. Why? Governance implies that people can change the rules.
Which means they can manipulate the outcome.
They can change the rules. They can manipulate the outcome, right? That's exactly the system that we're trying to leave. That's exactly the problem that we have today.
So we certainly see a lot of pushback when it comes to the implementation of Bitcoin. Because
Pushed back by who?
Well, the government of India, the government of China.
And I would say that marketing for us, right? So, for example, when the government tells you, "Hey, don't do drugs," look, we're gonna try to stop drugs. That doesn't make me want to go out and do drugs. Right. But when the government says, "Hey, you don't have the right to hold your wealth in a self-sovereign, censorship-resistant way," that makes me want to go buy it.
Yeah.
Just like when the government tries to crack down on guns, gun sales go up, right? And so when you see governments pushing back, and it's interesting. So look at this comparison. So we're seeing this vicious attack against Bitcoin. One of the attack vectors is on the energy usage. Right. Yeah. And they're saying that Bitcoin, because it uses this proof of work consensus mechanism, it's too energy intensive. And so it's bad. But we do like the POS, proof of stake systems. We do like those because they're much less energy intensive, right? No. The reason why they like POS, proof of stake, is because they can control it. Just like they can the fiat money system. The proof of work they don't like, they'll demonize it because that's the one they can't control.
Yeah. When you take a look at El Salvador or Zimbabwe, who have largely gone to Bitcoin, what's been the impact on the economies of those places?
Yeah, so we've seen Africa, specifically the continent of Africa, many areas across Africa have been implementing Bitcoin for quite some time now. And their economies have been doing really good. El Salvador is the one that's all in the news right now. And so that's an interesting case study. El Salvador is a tiny country, super poor. I've been there a few times surfing. I mean, you still see people getting around on oxen and cart down there. I mean, they're building roads by hand because they just want the people to work. And most people don't even have jobs. So it's a really poor country. I think they're ranked about 106th on the world GDP scale. So they're pretty far down there.
Yeah, pretty far.
Yeah, pretty far down there out of whatever 180, 190 countries. So below the 50 percentile. They about 2 years ago, a guy named Michael Peterson started something down there called Bitcoin Beach. And basically what he did is he took a Bitcoin and he went to this little community that had no economy, nothing going on for itself. And he said, a Bitcoin, first of all, a dollar can be divided into 100 cents, right? A dollar can be divided into 100 cents. A Bitcoin can be divided into 100 million sats. kind of the same thing, right? It's just different math. And so he basically put a Bitcoin there, 100 million sats. And he said, let's get a couple stores and bodegas to take it. Let's get a couple people to use it. And so he's got the people using this different money supply, a sound money supply. And the economy has blown up. It is doing so good. Just a couple of weeks ago, they hosted the ISA World Surfing Olympic Games there. They managed to be able to get a couple of people from their community sent to the Surfing Olympics. And now it's gotten so big. Now there's a whole community running off of it. They have education programs, all these things going off that the government took notice. The government's like, what the heck is going on down there? We need to take a look at it. And now, of course, I think you just mentioned, the government of El Salvador has now said that Bitcoin will be recognized as a legal currency in the country. And not only is it legal currency, everyone has to accept it. And they want to use it as their reserves. Now, one I think misconception that people have of this is even though everyone must accept Bitcoin, they don't actually have to receive the Bitcoin. So in the app, when they receive the Bitcoin, they could choose to receive it in dollars. So it's not like this unfair system, like we're forcing Bitcoin on people. They can choose, I'm accepting it at the point of sale, but in my bank account, I receive dollars. So it's kind of easy for them if they want to do that. But yeah, we've seen them do that. And like I said, El Salvador's seen the benefit in their country from a little scale that they want to blow it up to a bigger scale.
I wonder how that's going to work, Mark, for immigrants here in the United States who are from El Salvador, wants to send money back home. What options are they going to have? Are they going to send them in a hard currency like, US dollars, or the US system is not going to allow the Bitcoin transactions, I'm assuming. So that's a great point that you bring up, and it's actually one of the most very important points. So it's good that you brought that up. So you're talking about global remittances. So that's all correct. Across the world, people leave their countries to come to maybe America usually, or maybe other developed nations and work, and then they send money back home.
That's what happens. I believe in, sorry if I don't get this number exact correct, because I've been looking at so many numbers, but I think remittances make up about 30% of GDP in El Salvador. Some nations, it's as high as 50% of their GDP is remittances. But about 30% of their money is coming, GDP is from remittances. But the problem with remittances is most people are going to say Western Union, for example.
You're right.
And they go to Western Union to do that, but their fees are so exorbitant that typically about 30% of those remittances get eaten up in fees. Plus, it's such a hassle. I don't know if you guys have ever tried to do Western Union, but I got to drive to like a grocery store and I got to stand in line, and it probably takes me an hour to do it. Plus, the fees are sky high, like I said. So now we could send remittances in Bitcoin. And I could do it right from my phone, and I could send it to you, and you could have it literally instantaneously and for free, no fees. So that if you look at 30% of the GDP is remittances, and they can shave 30% off of that, or I'm sorry, increase that. Imagine increasing your GDP by 30%. Now in the United States, we can't even get our GDP to grow by more than 2%. Imagine growing it by 30% just by adopting Bitcoin.
Wow. Well, one of the comments you made in one of your videos, which was absolutely fascinating, is with cryptocurrency, most especially Bitcoin, the government is now going to have to prove their worth because they're not going to be able to control the money the way they do currently.
Well, I mean, that's the plan, right? I mean, that's the hope is again, going back to the problems. I've used this analogy many times, but imagine like this giant oak tree. And at the top of the oak tree is whatever, 10,000 leaves. And each leaf on that tree is a problem. And we could talk about income inequality and high incarceration rate and divorce rate, whatever you want. But at the root of all that, at the base of the tree, at the very bottom at the root is the money printer. Yeah. That's the problem. And you have to think about, like, a lot of people think that money is neutral. It's like a tool, right? I can use money for good. I can use money for bad. It's neutral. Well, the fiat money system isn't neutral. The fiat money system is actually a system built on theft. Inflation is theft. When they print more money, they're stealing value directly out of you, right? So it's a system built on theft. It's a system built on lies and deceit. We don't know how much money's there. The Fed won't undergo an audit. They don't tell us how much they're printing. It's lies, theft, and deceit. So anything that's built on that system is going to be inherently bad. Charlie Munger, Warren Buffett's partner, said that show me the incentives, I'll show you the outcome. So when you create a money system that the incentives encourage theft, lies, and deceit, what do you think the outcome is going to be? Versus Bitcoin is a system that the opposite of lies is truth. So Bitcoin is truth. Bitcoin is open source. There's no proprietary code. It's completely open. Anybody can look at it. I run my own node at my house. I can verify the network. I know exactly how many Bitcoin are there. I know exactly where they're at. It's a system built on truth. And so to your question, countries could kind of verify how much money they have. Yeah, they could, right? It could be on the open blockchain and it could all be verified and we'd have truth as opposed to lies and deceit.
Wow. That's interesting. This leads me to one key aspect, Mark. I'd like to pick your brain on it, and for our viewers also, especially those in Asia. With the changes that's taking place on the ground, geopolitically speaking, with China's expansion, economically speaking, their GDP for last, I think 8 months, I saw some stats there, they were 18%. So, and their bilateral relations with regional countries like Indonesia, Malaysia, South Korea, and so forth. Will the Bitcoin going to play a role into that process moving forward, knowing that China, sometimes they will support Bitcoin, other times they will ban Bitcoin? It's back and forth. What's your take on that, Mark?
Well, what I would say is if we only look at the financial side, we don't know. But if we go back and we look at the political, social, cultural, and we look at the technological, I think it gives us a different answer. So back to the political, social, cultural cycle, we're in a 252-year revolution cycle plus an 84-year regime change cycle. And so what we're doing is we're going to move out of a system of centralization and move to a world of decentralization. Then we look at the technology, which gives us, again, a technological revolution of decentralized technology. So then just bringing that back into our memory, going back to answer your question, I believe the future is decentralized. So it's not about what China is going to do or what the US is going to do. It's that my reserve status, my reserve asset today is Bitcoin. Your reserve asset can be Bitcoin. A lot of the S&P 500 companies are now using Bitcoin as a reserve asset. So El Salvador has made it a reserve asset. Now, the United States won't. The United States will still use gold, and other countries will still use dollars, and that's fine. But it's a decentralized approach. You choose what's best for your reserve asset. I'll choose what's best for me. China, they're probably not going to move their reserves into Bitcoin anytime soon.
Yeah.
But that's okay. I can use it as my reserve asset. It's a decentralized future, in my opinion.
Do you have an opinion as to what America is going to look like in 10 years? Because we're seeing the revolution is occurring right in front of us.
Yeah. So that's a great question. So I've been through, I don't know, a dozen books to kind of build just that political, social, cultural part. One book that I read that's gotten a lot of press is The Fourth Turning. And they also talk about this 80-year cycle, and it's broken up into 4 20-year cycles. And what's interesting about that is they talk about in the fourth turning, which we're in right now, that's where all the change happens. And so it kind of goes along with Vladimir Lenin's quote that there's decades where nothing happens, and then there's days where decades seem to happen. And so to your point, this next decade is where all the change happens. And so we can see that already. I mean, look how much the world changed in 12 months.
Yes.
I mean, nobody, whatever now, I don't know, 14 months ago, nobody would have ever guessed that we would be where we are right now. I just read a report, 150 hospital workers were fired in Houston because they refused to take a vaccine. Like, what? I mean, the state of California, Gavin Newsom says that now he's going to allow businesses to enforce a vaccine passport. Like, what? In 14 months, that's where we're at, like deplatforming and woke culture, all these things. So anyway, we can see the evidence already of how fast the world is changing. So over the next decade, probably the next 5-6 years is where we see all this happen. It's kind of like, first of all, any financial market, trying to time a market is almost impossible. And even like the weather, right? We have summer, spring, winter, fall, and on the calendar, they happen on an exact day, but that doesn't mean the weather just changes on that day.
Right.
But more or less within a few weeks or whatever, then you start to see those changes. And so a lot of these cycles are like 2021 to 2023 or 2023 to 2026. So it's really just this decade. But I guess to go back to your question, like, what does it look like? At the end, in 10 years from now, if we're looking backwards on it, that's a tough question. I don't know if I've actually answered that before. I would say that I would probably say that the U.S. dollar reserve status is probably gone globally. I would say that the government is working in much smaller, decentralized fashion, more in line with how the country was set up originally, where states have sovereign rights. Everything's kind of become federal today. I think that money printer will be severely diminished. So we're going to see much less federal oversight, but that also includes much less government spending. So it's going to be a very tough transition for people with entitlements, pensions, things like that. Also, people on welfare, and I would expect that we'll see that all over the world. It's not going to be a smooth transition, and I don't say that lightly. I'm worried for everybody, which is why I spend my whole career trying to wake the world up to this. It's kind of like we're on this ship that's sinking, and if we can get enough people off that ship into life rafts, we can limit the impact of that ship going down, right? Not as many people get affected by it. And so that's what I'm trying to do, get people on the life rafts. But I would say that, like I said, the transition is not going to be easy. It's going to be very difficult for a lot of people. But I think the world will be much more decentralized, which I think is a good thing in the long run. And we can eventually start to grow again. So what happens is after the revolution happens, you get springtime, right? After the winter, you get spring. That's where all the new life happens. That's where all the growth happens. That's where we go out of the dark ages and into the Renaissance phase, right? So new explosions of technology and communication and smart and everything's good, we have to shake that dead weight off. So that's what I'd say where we're at.
So on that point, Mark, just on the global economy aspects, I know what you just said, applies basically to everything. But if we are to literally limit it to global economy, where do you see the next decade? Given that the new alliances that have been built, Russia and China alliance, China, Iran, Russia, Iran, South Korea, China, Indonesia, where do you see?
Well, I think so. First of all, you have to understand, at least the way that I see it, is that all those alliances, as you're talking about, are being built with the money printer.
Right.
Okay. So the U.S. and this is the problem. So there's something called the Triffin's dilemma, and so the Triffin's dilemma is that any country that has the reserve currency status is going to be forced to offshore dollars to support the rest of the world. And that's the problem that the U.S. has been in. So people think that the U.S. having the reserve status is good because we can print unlimited amounts of money, but it's actually bad because it's forced the United States to offshore its entire manufacturing base. So it's hollowed the United States out. If there's any hope for the United States at all, it's to end the reserve currency status and start to build the United States back up again. So the U.S. has basically been sending dollars to China, and then China uses those dollars to go lend it to all the countries across Eurasia to bring them into this alliances, as you're talking about. So back to the question, I believe that as the money printer dries up, we start to take away this power and all these alliances start breaking apart.
Oh, interesting.
And because the dollar is going to China, China's sending the dollars to the rest of the world. And what's interesting, they're using the dollar against us. They've weaponized our own currency against us. And so what they've done is they've went around and bought all these countries into their alliance. Mm-hmm. But when these countries default, guess what happens? The United States opens up swap lines and bails those countries out. Rather than allowing those countries to go bankrupt and then the debt being pinned to China, no, the U.S. bails them out. So China's actively attacking the U.S. with its own dollar. So I think that goes away. The money printer goes away. And then all these alliances start dropping out. And then each country starts trying to be self-sovereign again. And I believe that we see countries like El Salvador. And since El Salvador's come on board, I think there's about 5 or 6 other countries that have jumped on board: Panama, Uruguay or Paraguay. I think I've seen Colombia talking about it. And so now we're starting to see other countries come on board. And I think that those countries start to outcompete, and we'll start to see countries doing much better. And that, in my opinion, that competition piece I just mentioned, that is everything. So what do I mean by that? We're on this gradual push towards totalitarianism.
Right.
Anybody can see that. China with their social credit score system, the US censoring and deplatforming everybody. We're moving into this totalitarian nightmare. At what point does that change? At what point do the government leaders wake up in the one morning and say, we have too much power and control. Why don't we give freedoms back to the people? They don't do that. They won't ever do that. So then what causes that? And back to you, that's kind of your question. Like, they're going to continue to build these alliances. What breaks that grip? In my opinion, it's competition. So we can see this playing out in the United States. California and New York were the 2 most strict nations in the state. Everybody's left those states. California has been so strict for years. Hollywood's gone. I think California is ranked number 4 in movies now in the United States. Silicon Valley is mostly gone. Oracle was like the last big company that left. Elon Musk said he was going to leave, and the rep Sanchez tweeted "F you, Elon," and he tweeted back, "Received," and he left. Nevada, Texas competed for him. And so we've seen Texas outcompete California. And guess what's happened? The governor's being recalled. We've seen Florida outcompete New York. Wall Street's left, New York Stock Exchange left, Goldman Sachs, they're all going to Florida. And now we have the governor, 1, facing all types of charges now. And 2, he's on the news begging the rich to come back, saying, I'll even buy you, or I'll even cook you dinner. So those states have been outcompeted. And now DeSantis is like leading the charge here. People love what he's doing. But what about when nations compete?
Yeah.
And so that it's the competition that breaks this trend. So when enough people leave the United States to go to another country because they can live free and they can run businesses, et cetera, other countries are going to go, well, wait a minute, you can come here too. And then more people go there. Well, you can come here too. And eventually so many people have left the country like the United States will be forced, not willingly, be forced to change their policies before they lose everybody. And we can see this a couple of ways. So one, China, I think, is a pretty good example of this, right? So China was one of the most strict communist countries for whatever, 40, 50 years. And they realized that they were being left behind. They had extreme poverty while the rest of the world was having massive flourishment. And so they had to change that. And so they opened up some free ports, and they sprinkled in a little bit of capitalism. They had to relax some of their communist tactics. And by doing that, look where they're at today. We're talking about them challenging the United States. And so it was the competition. Other countries outcompeted them, and it forced them to relax their communist tactics and create some more open policies. Now, that's not a perfect symbol, but I think it's a good illustration. And so I think we'll see these big alliances break down. The money printers dried up. We'll see smaller countries like El Salvador setting the stage to outcompete. And that competition trend will then continue the decentralization. And think about how fast this happened. So as I grew up, there was still the Cold War and there was still the Berlin Wall. I had many friends can't come to America from Iran, Afghanistan. One of my best friends came from South Africa. And when they came, leaving oppressive countries, coming to a free world, they came penniless. They couldn't bring their gold. They couldn't bring their real estate, and they weren't allowed to get their money out of the bank.
Right.
So if you leave an oppressive regime, but they keep all your wealth, how much have you really damaged them? Not very much. But what if I could put all my wealth cryptographically secured? All I know is 12 words in my head. I could swim naked to another nation, and as soon as I get on a computer, I have all my wealth. Now that speeds up the competition loop big time.
Yes, absolutely.
And we can see why governments would not want that to happen.
Well, they don't want you to have the ability to control your wealth and have it be portable, where you could take it anywhere you want and give it to anybody you want. Of course, they don't want that.
So, Mark, just one more question, last question here. If there is any advice you can give to our viewers or to all of us here, what should we do? How should we prepare? What kind of precautions we should consider as we are sort of going to be facing the storm? The storm is coming. We know it.
The storm's coming. So the first thing I would say is, one, the storm's coming and you need to be paying attention. So I like to say that an ostrich can bury its head in the sand, but it's still going to be eaten either way.
Yeah.
Right. So don't ignore it. That's not going to help you. So one, pay attention, right? We don't know exactly step by step how this plays out over the next couple of years. And so you need to be paying attention so you can navigate it. Again, you mentioned the storm. So if I'm watching a storm, I'm in Puerto Rico right now. Everybody's like, Mark, aren't you afraid of hurricanes in Puerto Rico? Well, I would be, except for I can see a hurricane coming from 2 weeks away and I can watch the storm. And if the storm is going to hit me too hard, I can leave, right? So I have to be paying attention to that. And so watch the storm. Another thing I'd say is, well, how do you prepare for that? A couple of things. One, be prepared to be resilient. And so for some people, that means moving to a ranch and be self-sustaining, grow crops and cows. I don't want that. I don't want to live on a ranch on a mountaintop somewhere. So for me, I prepare another way. So I've tried to kind of make myself uncancelable, for example. So I have high value skills that can be done from anywhere in the world. What are high value skills? Well, the closer you are to the money supply, the more money you make. So that's typically sales and marketing. If I went to you guys and said, hey, I have a way to bring $1 million of revenue to your business in the next 12 months. If I do that, would you give me 100,000? The answer is yes, of course, right? So I want to get close to that money supply. So that could be learning how to run Facebook ads. That could be learning how to do copywriting. That could be doing video editing for you. That could be any number of things that could be done. Now, I could learn how to do accounting from anywhere too, but I probably wouldn't make as much money doing accounting as I would driving sales to your business. So typically around sales and marketing is the ideal, but learn those skills that could be done from anywhere. And the reason why I say from anywhere is because I don't know where you are in the world, but there might be a chance or a reason why you need to go somewhere else. Wow. Like I left California and I came to Puerto Rico, and it hasn't affected my work because I can do my work from anywhere. So learn high value skills, be prepared to go somewhere. And then two, the next thing I'd say is start looking at those places you may want to go and start visiting them. You need to know where you're going to go in advance, not after the gate's already, locked. You need to be already know where you're going to go. So, write down some places or think about places you've taken vacations, and maybe go check out some new places and start to think about this. Have that plan B in place. Also, I would say is you mentioned earlier thinking about purchasing power. So when it comes to your money and your investments and things like that, think about things in terms of purchasing power, not just in US dollar value. And so the game is to keep your purchasing power going up. And so stocks that are going up in US dollar value, but they're not going up faster than the rate of inflation, are actually losing purchasing power. So think about things in those terms, trying to keep up ahead of a purchasing power. Of course, hard assets that can't be artificially inflated. So commodities have done really well because those are real assets, right? As they print unlimited amounts of money, people are going to want to buy hard, real assets. So commodities, of course, we've talked quite a bit about Bitcoin. I think that's the greatest investment that we have today. It's averaged a 200% per year compounded annual growth rate. No other asset in the world can say that. I know that right now, a lot of people are loving to hate on Bitcoin because it just crashed all the way down to 30,000, which is still 300% up from where it was 12 months ago. So it's crashed all the way down to 300% up from the last 12 months. So I'd say is just zoom out on that. Yeah, I mean, those are kind of the tips that I have for right now.
Great. I'm sure our viewers find those tips will be very, 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 very useful.
Not only our viewers, we
find them. I like that stuff. So.
Well, I mean, think about what you guys have done. I mean, I don't know about your previous professional career, but now you're running this channel and this show, and this is something you could do from anywhere in the world. Even if you guys went to separate places, you could still continue to do this. And so a lot of this is tough because people are lazy. And so here's the problem. So imagine a lion in the jungle. King of the jungle. I mean, it's the king, but it's not a safe or easy life for that lion. It has to fight all the time to defend itself. If it doesn't catch food, it's going to die. I mean, it's not safe or easy for that lion, but it is free. Now, we could take that lion and put it in a cage, and we can give it its antibiotics and its hormones and give it one meal a day. Now the lion's safe, but it's not free. Now, imagine where we are as a people moving towards safety and not being free. Here's the problem. Once that lion lives in a cage, how does it ever go back and live in the pride?
Right.
And so we have people that have been moved on this path. At all the national parks in the United States, they have signs, don't feed the animals, because they'll become dependent and can't get food on their own. So we have all these people that have become dependent, and they need to learn new skills. You need to work a couple extra hours at night to build your skills up. I'm sorry, life's not easy, but if you want to survive, you're gonna have to do the work. And that's the one piece that people have a real hard time with. But you got to get over that part.
Right. Mark, where should our viewers go to learn more about you, your channel, all the knowledge you have and all that? Where should they go? Yeah, sure. So if you really want to keep up with me, probably the best place you could go would just be to links. links.onemarkmoss.com, links.onemarkmoss.com, which links to all my stuff, because I'm all over the place, podcasts and YouTube and Twitter and Instagram, etc. I make videos 3 times a week on my own YouTube channel, Mark Moss. And I'm probably the most active. If you want to tweet at me on Twitter, it's the #1 Mark Moss. And feel free to tweet at me, send me some questions. And that's where you're most likely to probably get my attention there. Great. Well,
thank you so much. This was really wonderful.
Yeah. Well, we can't thank you enough, Mark. We truly, truly appreciate it. And we look forward to having you next time, because we're going to have you again here.
Awesome, guys. It's my pleasure.
Let's talk to our viewers. Let us know your thoughts in the comments. Also, be sure to check out our other videos. Don't forget to like, share, and subscribe. Thanks for watching.
And as always, stay informed. Till next time. Bye-bye.